Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
What we need to do now is look at the stock movers. Maybe Nvidia's in there. Who knows? Maybe United. Maybe JetBlue. Let's take a look at the stocks on the move today. With us, Lisa Mateo.
You're right, and we'll start with Nvidia. Those shares have been up as much as 6% before the open. There were a lot of concerns about a Chinese slowdown that was pretty much squashed. They had a solid sales forecast. It was despite, though, an estimated $8 billion loss of revenue in China because of restrictions. Then you had CEO Jensen Huang kind of setting the tone. He said AI computing market is still set for exponential growth. So the specifics, it expects revenue of about $45 billion in the second fiscal quarter. Now, aside from that, we also have Salesforce. Their shares actually losing momentum. So this is kind of a back turn. They were higher before the bell. They're shifting lower. Right. So the good news is that it raised its annual forecast. A good sign for AI agent product, that product they have. What's causing the shift lower is that it was a downgraded RBC capital market. So that was a reason why they say they have a problem with that acquisition of Informatica. That was for about $8 billion. Yeah.
I like how you put this together. But Paul, with the conversations we've had, including Dan Ives and Ivan Feinseth, it was on fire. Basically, AI goes at present from Nvidia to where it benefits Salesforce down the road, right?
Down the road.
That's the theory?
Tech stack. I think it is, but they're pretty good numbers out of Salesforce, I thought.
I don't know. What else do you have on stock?
Who's not, though, doing so well, that would be HP. So their shares have been down as much as 10%.
Could you do anything besides technology?
I will. We will get to it. So their profit outlook fell short, cut its annual earnings forecast, right? Weaker economy, tariffs, that's what they're pointing to. Reduce its annual adjusted profit outlook. But it's a big maker of computers and printers, and its CEO said demand for computers, well, you know what? That's just being hurt because of the weaker economy and those industry-wide price increases. So that's their problem. And since we don't want to talk tech anymore, we'll go to Kohl's, okay? Its shares have been up 5%. This company's really been suffering. Competition posted revenue declines for 3 years, but it got some good news, better than expected comparable sales, affirmed its full year outlook. Right. It's using a new strategy in its stores. It also has some internal changes. Remember, they ousted their CEO who was there for just a few months. Now it's looking for a new leader.
I cut you off. This is Kohl's of the Midwest.
Kohl's department store.
Wisconsin.
Yes, retail.
Menominee Falls.
I didn't know that's how you pronounce it.
Outside of Milwaukee. Home of the old Strong Funds. You'll know that.
We're not allowed to talk about the Milwaukee Brewers. They swept the Red Sox. So Kohl's what? Up?
Yes, it is up because they're seeing better times now. So they're making these new strategies. They're expanding petite sizes. They're changing their stores. And they have a lot of internal changes.
That changes my shopping when I see a petite size.
Petite sizes.
Go away.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.